and welcome to video number 2, which is called positioning. Now, what do I mean by positioning? If you have read Robert Kiyosaki's book, The 4 Cash Flow Quadrants, just going to go through it quickly, then he has 4 quadrants. And the first quadrant is being an employee. So imagine this circle here is a business or a business system that produces a profit. And as an employee, you are a part of the system, so you have a job, you work in the company, so you are employed, and the amount of money that you can earn is limited because you have a boss, you are part of the system. Then the next quadrant is being self-employed, which means if you're a doctor or if you're an accountant or a specialist in your field, where you are self-employed, you make your money directly with your clients because you have a certain knowledge about something, then you are basically the system. So you are the specialist who makes money. So the system or the money comes from you. If you stop working, the money flow will stop working as well, or stop coming as well. Then the next one here is the entrepreneur quadrant, which means you are the owner of the system, which means you manage everything, but you're not actually working inside of the system. You simply put the pieces together and your company or system makes a profit, but you run everything, you manage everything. And then finally here we have the investor, which is somebody who invests into the system or into the company. And this is very, very important to understand. So you see, if you are working or you're focusing your energy here in this part, and if you're trying to get a better job or just work more hours or stuff like that, you're not really going to excel, and that's very important. You're only going to be limited to what you can earn. If you're in this part here, being self-employed, yes, you can make a lot of money. It's great, but it might take you some time. Now, ideally, you want to be in this part here, either an entrepreneur or an investor, because this is where you're going to be most successful in the long term. Now, let's talk about leverage. And leverage is very, very important. And what do I mean by leverage? There's different forms of leverage that you should be aware of. If you, let's say, work 10 hours, and let's say your job is to give massages. So let's say you work 10 hours and you earn, let's say, $20 per massage, so to speak. Then you will make $200. Okay? So now, how can you make more money? Well, you can work maybe 12 hours or 15 hours or, I don't know, maybe that's the limit. Or you can charge, $25 or $30. You can charge a little bit more, so you can increase the hours or increase the amount that you get paid. And so those things have a certain limitation, which means the day only has 24 hours. People are only willing to pay so much. So therefore, the amount of money that you can earn is limited, so to speak. Now, let's turn this around. If you have, let's say, a massage studio, and you have 10 employees, 10 people who work for you for that massage palace, so to speak. Okay, I'm just taking this as an example. And let's say you are fully booked and you have clients and you make now 10 times 200 per day, which is $2,000. And then you pay your people, let's say, $10 an hour, so you have $1,000 in cost. But your profit in the end is much higher, is 5 times higher, is $1,000. So now you have the necessary leverage because you have employees to make more money. Okay, so your job changes. So your job changes from being the person who gives the massages themselves to being the person who organizes the clients, the salon, and so forth. You see where I'm getting at? So the idea is to change your business approach by adding leverage, okay? Not just working harder, working longer, but by putting in leverage. And leverage, one part of leverage is having employees. Now, let me tell you about Hemis Corporation. This was the company that I took public in the stock market, which was valued at $300 million in the stock market. And I want to explain to you how I was able to do that. So first of all, we talked about positioning. So first of all, Hemis Corporation was a company, and I consider myself being an entrepreneur. Now, Hemis, which was funny. At first, when I started with this company, I didn't know exactly what the company should be doing. So I just knew I wanted to have a company, and when I incorporated the company, I couldn't come up with a name. And interestingly, it was my cat's name, which was Hemingway. In short, I called the cat Hemis. So Hemis, come here, kitty cat. So what happened was the company actually turned into a huge, huge deal, and with 60 employees, with 25 geological projects all over the world. And what we did was we started with a gold project. So Hemis was a gold exploration company. And we had our first project, or secured our first deal, in Mexico. So coming from Switzerland, having a company in Nevada, because I wanted to take the company public in the US, I was convincing investors to invest into our deals, into our company. So the investors invested money into Hemis, and in return, they received shares. So now what Hemis did, Hemis obviously now had a nice big project, and we raised over $40 million in total from about 500 different shareholders at first. And what happened was, now Hemis, I was here, the CEO, I was able to get a paycheck, obviously, and I made $10,000 per month. So that was my salary. And plus, obviously, I had shares and so forth. But now the money went into several projects. And those projects were gold projects, first in Mexico, but then also all over the world in other countries. And that's really a cool system, because when you look at this, is okay, I built myself, I got myself a job, if you like, so to speak. But at the same time, I was bringing money into the company from different investors. And here I built a sales team to help me with that particular job. Okay, so a sales team actually raised capital from investors. They bought the shares, and then the company had the projects. Here we had the shareholders, and here I had 25 projects, and also had about 10 different geologists, staff, and what have you. Okay, so all these people were responsible for the overall success in the end of Hemis. So what did it actually do? So we started at 27 cents per share, and the company's share price went to $3.50. So that's about 12 times more than the initial investment. So that's a basic structure of how we did things. And you can do this with anything. I mean, basically, I didn't have any money to start out. I didn't own a gold project. I had to look for the gold project. I didn't know too much about gold, but I had the courage to ask the professionals, the geologists, to give me their expertise and time and so forth, and to be part of the team. And then obviously I was able to motivate people to help me sell, to help me raise capital for the projects of Hemis, for the idea, so that it could become a success. And this is some like an overview of the system of how it worked. So an interesting part of being an entrepreneur is obviously to grow your company, to grow your business, to grow your system, okay, or your systems. Or in my case, what I've done is I've duplicated the system. So when I started out with Hemis as the first company. And the first company had several projects here, and several people were working for it, and money went into this. But after a while, because Hemis was focused on Mexico mainly, there were people who said, "Oh, we want to invest into a different region, like in Peru." And in Peru, we started with a different company, which was Orem. And Orem, in that case, had another project in a different area. But what it meant is, obviously, I had to take the system from here, copy it here, and duplicate, so to speak, the process or the company just with different people and different projects, okay? And then we did this in total 5 times, and with different companies. One was a uranium company, so here we had a uranium company. Then here we had another gold company and another project that was also focused on gold and silver. So you see, every company that we had here was a system in itself. And here's the interesting part. Because I was managing everything, because I was running everything, obviously I had several income streams coming from that system. And once you have a system that works, okay, you have the ability to duplicate a system, duplicate an idea, duplicate the process, and that way you can duplicate your income. So in my case, I had 5 times 10,000 alone from these companies, and the companies were financed independently. Okay, so ask yourself, what is it that you could put together as a system that works, and how could you duplicate it? And finally, I want to talk again about leverage, about other people. So you need employees to grow your company. You need, let's say, other stores or locations. So you need different sales channels, not just one sales channel, because usually if that doesn't work or there's a problem there, your flow of money will stop. You can also use other people's money, like investor, or you can use a loan, for example, from a bank or a financial institution. Then the knowledge of other people is also a form of leverage. So in my case here, I had geologists who had 20, 30 years of experience in their field, and they knew what they were doing. So I had the specialists who were running the actual projects. So I didn't have to know about anything about geology. I mean, I learned, obviously, but I hired the right people who knew what they were doing. And on the other hand, what I had to do is I had to put the pieces together and run the entire company, take it public, make sure money gets raised, and so forth. So the knowledge of other people can be a huge, huge factor in credibility, in knowledge for the particular topic, so which is leverage. Then the internet is a form of leverage, because you can sell your products 24 hours a day, and not just to one person. You can sell it to thousands of people at the same time in seconds. Okay, and this was not possible before. Another factor can be the cooperation with other companies, because what we've done is we have had some joint venture deals. So some of the projects that we had were a joint venture or corporation with another company, and one of them was the second largest gold company in the world, okay, which was Goldcorp at the time, which means for us as a new startup company, this was huge, because we now had the credibility of this large company, and we had their assets, their knowledge, and so forth, which obviously was a very, very important factor for our organization and for the investors and so forth. And then sales teams. You need to understand, you need to be selling something. You need to be selling your company's products, obviously, but you also need money to get in the door. And sometimes this works well if you raise capital. How I do this, I'll explain later. Then also, if you have the right names or lists, you need to be renting or buying names, or you need to make sure that you get the right kind of people who are interested in your company's products. And finally, there's other forms of leverage, which can be other people, contact, credibility, resources, technology, software, famous people, reputation, or you can produce a product without having to pay for it first, and so forth. I mean, there's all kinds of leverage. So use leverage, because this makes all the difference. And without leverage, it's very, very hard. So think and create a plan.